Over the past several months, the idea of security tokens has been gaining momentum in the crypto community. And in this episode, we're going to answer the question, is this the next big crypto boom, or is it just a lot of hype? Welcome back to Chris Dunn TV, the show that's all about helping you learn skills to create income and build wealth in today's economy. And don't forget to subscribe if you haven't already done so. Now, over the past several months, I've been traveling a lot to San Francisco and New York and talking to everybody from entrepreneurs who are looking to launch crypto tokens to venture capitalists who are looking to get on the back of this huge crypto revolution and everybody in between. And the concept of security tokens has really been gaining momentum. And so in this episode, I want to take a look at what security tokens really are and what are some of the pros and cons of them. And I'm going to give you some predictions and some opinions of where I think this stuff is headed. So before we dive in, just some quick disclaimers. I am not a financial advisor or an attorney, so this isn't legal or investment advice. I'm just a personal investor. I trade and invest my own capital. I don't manage anybody else's money. And trading and investing in cryptocurrencies is extremely risky. So please, guys, don't invest or trade with capital that you can't afford to lose. So before we define what security tokens are, I want to give you a little bit of history of the recent evolution of crypto assets. And kind of the first phase was what I call the rise of Bitcoin and cryptocurrencies. And Bitcoin's inception was back in 2009, but it really started to pick up steam in 2013 through 2015. And looking at this Bitcoin chart, you can see this was the China bubble of 2013 and 14, which was really the first time that Bitcoin kind of got on the global map. And then the second phase, which was over the past couple of years, was the ICO utility token boom. And we can see here going into 2016 when Bitcoin's price really started to take off all the way through 2017 and into the first part of 2018 where the price went from about $1,000 up to $20,000, and then over the past several months Bitcoin has been pulling back hard. What helped cause this was the ICO or the utility token boom. And now we're going into the third phase, which is the tokenization of securities, right? I think 2018 is really the first year that this stuff is starting to come out, and it's only going to gain more momentum over the next few years. So let's talk about the shift from utility tokens to security tokens, and just a couple of quick definitions. Utility tokens basically grant future access to a product or a service, right? And there have been so many ICOs over the past several years. Many of them have been scams. Many of them are good projects that will eventually fail because that's what startups do. 90% of them fail over time. And there's going to be some coins or crypto assets that have launched in the past few years that will likely succeed over the long term. But we've gone from a shift from utility tokens, which basically let you access a network or give you some kind of benefit into a crypto asset, where security tokens are legally defined as like investment contracts, right? Sometimes they represent equity in a company or dividend payouts, something like that. And so this mindset shift from kind of the wild west of utility tokens to security tokens started to really gain momentum earlier this year after Jay Clayton, the current SEC chairman, said, I believe that every ICO I've seen is a security and we should regulate them like security offerings. End of story. Right. And so over the past several months, we've started to get more regulatory clarity, and a lot of the projects that we're going to do utility token ICOs are now shifting into security tokens. Okay, so what exactly is a security token? Well, it's basically a crypto asset, right? Could be a cryptocurrency, could be a network, could be a token that is legally classified as a security or like equity in a company or like just like a stock, right? And because the goal of a lot of these tokens is price appreciation or dividends or other forms of profit that rely on the efforts of other people, right? Going back to the Howey test, like we've talked about in prior videos, by definition, at least here in the US, the regulators are saying, hey guys, most, if not all, of these ICOs are securities. Therefore, we need to regulate them as such, hence the new name, security tokens. Now, security tokens can be different types of crypto assets. For example, they could be currencies, right? Cryptocurrencies. They could be digital assets, assets that are traded digitally and have some kind of limited supply. They could be equity in a company, aka shares, right? Just like stocks. They could be rewards points of some sort, like travel rewards points or an evolution of that. It could also be fractional ownership in a physical asset like artwork or real estate. So let's take a look at some of the pros and cons of security tokens. And I want to start by looking at some of the benefits of security tokens for investors, okay, people buying these tokens. The first and most obvious benefit that I see is that it's going to eliminate many scams. And over the past couple of years, during that utility token kind of Wild West boom, we saw a ton of scams, right? I got dozens of emails at its highest point a day from new projects that I could tell were just blatantly scams. And I think security tokens are going to help crack down on that. Also, security tokens in a lot of cases are going to represent equity or ownership in something real, either a physical asset or a company, rather than just what we kind of in our community call fun coupons, right? A lot of these utility tokens, when I'd be evaluating their white papers or their websites, a lot of those didn't need a token, and B, many of them didn't even need to really be decentralized. And so the tokens really didn't represent anything. It didn't represent ownership in a product or a company or an asset. It was just kind of a way to raise capital for a project that really didn't need to even exist. And so another huge benefit is this is going to give us access to more asset classes, right? Things that haven't been able to be traded efficiently and quickly and cheaply, like artwork or real estate that's not in your local area. We're going to have access to that stuff. So I'm actually really excited about that. And then kind of the final benefit for investors is access to liquidity for asset classes that typically we haven't been able to easily buy and sell. It's just going to open up a world of liquidity, meaning it's going to make it much easier to buy and sell fractional ownership in these assets. Now let's talk about some of the benefits for entrepreneurs, right? People that either own assets that they want to tokenize and sell, or startups, right? New companies that want to raise capital for a product or a service or an idea. And so what it's going to do for entrepreneurs is make it easier, faster, and cheaper to raise capital even under the current existing regulations, which we'll talk about in a second, but also potentially gives access to a much larger investor base, right? A global investor base. For example, let's say you were here in the US somewhere and you had a startup and you were going to raise capital. Maybe you go to a single angel investor or a single venture capitalist, or maybe you go on one of the old school crowdfunding sites to try to do that. What tokenizing your securities does is it gives you the ability to raise capital on a global scale. Right now, there are some limitations and some drawbacks that we'll talk about in a second, but I think this is huge, right? Where an entrepreneur that used to have to try to fight his way into a VC's office or try to connect with the local angel investor group, this is just a much more efficient way to bring your idea to market. Also, it gives a better and more creative way to grow a community or a movement and customers, right? Like a movement behind your product. Just like we saw a big boom with the crowdfunding sites, right? Where people saw a product idea and they were able to pre-purchase those products. This is going to allow that to happen on a much larger scale. And there are also companies that are working on automated regulation, meaning trying to make the regulatory burden less expensive effective and quicker for entrepreneurs and startups. Now let's talk about some of the potential downsides of security token offerings. The first is that you potentially have a more restricted investor base compared to, over the past couple of years, the old school ICO model where people were just raising money from everyone and anyone. Under the current US regulations, which we'll talk about in a second, that does potentially restrict who you can raise capital from. Now, in one way, like we just talked about, one of the benefits is you have a much broader potential investor base, but under the current regulations, that does have restrictions around it. And I'll show you kind of the different options there. Another potential downside is lockup periods, right? Where if you raise capital, you might not be able to get liquidity or sell those tokens for a year or so, right? About 12 months. Now, it depends on how you raise capital, but I actually don't think that lockup periods are that big of a deal. In fact, I actually think it's kind of a good idea that if you're raising capital, that you should have some kind of incentive not to just flip your equity in a day or two, right? I think the problem with ICOs is you'd have somebody that would create a white paper and a website and they'd raise millions of dollars, and then a couple weeks later, without really even creating a real product, they would get listed on an exchange, flip their coins on the public exchanges, make a bunch of money, and then really not do anything, right? So I think lockup periods could actually help with that. And then also the cost of compliance, right? Obviously, there's some cost to structuring a compliant security raise compared to just putting up a white paper and saying, send me money, right? But again, whenever I look at the downsides of security tokens, it's really doesn't seem that bad compared to all of the potential upsides. Now, let's talk about some of the key players in security token offerings, okay? There's a couple of different services, there's a couple of different roles that companies are going to play in this space. The first is what's called primary issuance companies, or basically companies that help people launch these STOs. Also, we're seeing secondary markets, right? So after you create and have your primary issuance and you create these security tokens, then after a year lockup period, maybe, or a little bit longer, we're going to have secondary markets, which are kind of similar to the exchanges that we've seen in the stock market and cryptocurrencies recently, where you can take your tokens and sell them on the open market, meaning get access to liquidity. And also the protocols, right? Like a lot of these security tokens and companies are building infrastructure around Ethereum's ERC20 tokens. And obviously another key player is either the people or the companies that are offering the security tokens, right? These could be venture capital firms that are looking to tokenize their equity in startups, could be real estate holding companies that are looking to sell fractional ownership in some of their real estate projects. And I actually have several friends of mine that operate big real estate funds that are looking to do this. And also startups, right? People that are just looking to start a company and instead of going the old school model are now going to look to use security tokens. And then kind of the final category is advisors, legal teams, marketing teams, right? All the things that come along with supporting launching a security token. So let's talk a little bit about regulations. And again, I'm not an attorney. I'm just going to interpret this the best way that I understand it. But when it comes down to the crowdfunding categories, there's really three main ways that you could go if you want to raise money through a security token. And there's three different regulations. You have Reg D, Reg A+, or Reg CF, aka Reg crowdfunding. So let's dive into these three. Now let's talk about Reg D, or Regulation D. Okay, this is one of the most popular ways to raise capital if you're a startup. And the big differentiating factor between this and like just a regular crowdfunding campaign is the fact that under Reg D, you can only raise money through accredited investors. And we've talked about this in past videos, but an accredited investor is somebody that has a net worth of $1 million or more outside of their primary residence, or makes, I think, 200 or 300K over the past couple of years, right? And that's what is a big restricting factor for a majority of the population, why they can't invest in Reg D offerings. The benefit to Reg D is it's unlimited. You can raise as much capital as you want. General solicitation is okay. So you can advertise, but again, you can only accept accredited investors, and there is a 12-month lockup period. So after you invest, you can't sell those shares for at least a year. And kind of the big benefit for startups, and the reason why this is so popular, is there's no SEC approval required, right? You don't have to jump through a bunch of hoops. You just have to make sure that you only raise capital from accredited investors. Now, Reg A Plus is the second option, and the reason this is a popular choice is because non-accredited investors are okay. The challenge is you need full SEC approval, which is slow and difficult to get. You have to have audited financials, and there is a cap. You can raise either $20 or $50 million. There's actually 2 tiers with different filing requirements. And general solicitation is also okay. So again, how this differs from Reg D is only accredited investors, and you can raise as much as you want. Reg A is you can raise from non-accredited, but you have caps and you need full SEC approval. So it's a lot more expensive, it's a lot slower, and the chances of getting approved are a lot lower. And the final option, which is Reg CF or regulation crowdfunding, is a great option for much smaller projects because the max you can raise is $1,070,000, and you can raise from non-accredited investors, but you do have limits on how much you can raise from those people based on their income, right? So even though you can raise from non-accredited people, they still want you to ask about their income. And then you still need to file with the SEC, but it doesn't require quite the approval that you need with Reg A+. And there is a 12-month lockup with exceptions. So I know this stuff can get kind of dry, but it is important. And just, kind of a quick recap and my personal opinion on these 3. Reg D is great if you're going to raise from accredited investors because it's quick to do. There's way less hassle and you can raise as much money as you want. Reg A Plus, you do have a cap. It's a high cap of up to $50 million. You can raise from non-accredited people, but it takes jumping through a lot of hoops, audited financials, all that stuff. And then Reg CF is also a good option for much smaller projects because you have a cap of about $1 million, and you can also raise from non-accredited people. So there are options right now, and I do hope we see some changes in the near future around this. I think these are decent options, but I do think there is a lot of room for improvement. Now let's take a look at some of the companies that are offering services for security tokens. And the first one I want to take a look at is Start Engine. And if you look down here, we'll actually just jump all the way to the bottom of the page here, and you can see they offer investment opportunities in 3 different types, right? So they do Reg A, right, which is offered to non-accredited and accredited, up to $50 million. Number 2 is they do also support Reg D offerings, which is only accredited investors. And then they also do number 3, which is Reg CF, right, where you can do non-accredited and accredited. And they have a really good learn section here. So if you wanted to kind of see how this works, they have some really good articles you can check out. Another company is Republic, right? So they're offering this. And again, I don't have any financial ties to any of these companies. These are just the ones that happen to be making the most progress right now. But they also have some really good education and options on their website. Also Polymath. So you can see these guys, they launched their own token. And basically what they're looking to do is tokenize everything. So you can see, I kind of like this little example here, where Polymath is looking to basically tokenize everything from real estate to venture capital, commodities, and so on and so forth. Also, we've talked about CoinList, which is another platform that has traditionally helped launch ICOs for accredited investors only. And then the final one we'll look at is Harbor. So Harbor is the compliance platform for tokenizing private securities. So basically there are people that are trying to make the regulatory side of this much faster and easier and cheaper, to the point where maybe you can have automatic accredited investor verifications and basically build into the smart contract those lockup periods. That way you can significantly reduce the cost of regulatory compliance. Okay, well, now that we've gotten through like the regulatory stuff, let's talk about how do you profit with security tokens. And there's really three ways that I see to make money with security tokens. The first is to launch your own, right? If you're an entrepreneur or if you have an asset that you want to tokenize and sell fractional ownership in, you could do that, right? If you follow, in the US at least, if you want to raise capital from US investors or do this in the US, you need to follow one of those three kind of broad categories. And then the second is you could actually be an investor, right? So you could invest in the initial security token offering. And this is just like startup investing, guys. This isn't really like a revolution where everything's changing. It's kind of like the next step or the next evolution in private startup equity asset fundraising, right? So it's higher risk, right? If you're going to buy an STO, just like an ICO is super high risk. Buying at the initial offering is higher risk, but also the potentially the highest reward if you're getting in at the cheapest price that security token is ever going to be. And then the third option is you could trade or invest security tokens in secondary markets, right? And what a secondary market is just like we have exchanges to trade cryptocurrencies on. T0 is an example of an exchange where you're going to be able to trade these security tokens after you either invest in the STO, or you could go on here and buy security tokens off of the secondary market. And some of the benefits of waiting to either trade or invest in a secondary market is you have price discovery, right? Like if you're buying in the initial offering, you don't know what the demand for that token is going to be a year or two down the road. Whereas if you are trading or investing in these in the secondary market, you can wait for the token to list, see if it crashes or if it has a flood of money, and you can wait for price stability. Now, the benefit to that is with price discovery comes a little bit less risk because you're waiting longer. But also the downside of that is you are potentially going to pay a higher price. But on the flip side, you might actually be able to buy in at a lower price because price discovery shows you the true supply and demand of a market, like we talked in my last video, right? So again, just to recap, you can either launch in a security token, you can invest in the initial issuance, or you can wait and trade or invest in these things after they list on an exchange. Okay, so now that we've kind of looked at the evolution of crypto assets up until today, and we've defined what security tokens are and a little bit about the regulations around them, I want to give you some of my opinions and predictions around where I think this stuff is headed. And the first thing I'll say is I'm really excited about getting access to new asset classes, right? Whenever we tokenize all of these asset classes and we add liquidity to it, it's just going to be so much better for investors to be able to buy into stuff that they haven't been able to do before. And I think that security tokens are going to be extremely volatile over the next few years, which is great for traders, right? If you're an active trader and you're going to trade on these exchanges, I think there's going to be a lot of opportunity over the next 3 to 5 years, kind of like we saw with Bitcoin in the early days, right? Like I started actively trading Bitcoin in 2013, and all the way up until recently, we've just had tremendous growth and tremendous volatility. I think we are going to see similar volatility in some security tokens. And the next point I want to make is I'm only going to be investing in fully compliant security token offerings going forward, right? I just think there's too much risk. If you're looking to raise capital from Americans and you're not going to be compliant, there's just too much risk for me to entertain that idea. And I also think that we're going to see liquidity premiums on some of these assets. And what that means is anytime you have an asset that's tradable that has access to a larger investor or trader base, by default, some of those assets trade for higher prices than if it was something that was really hard to buy and sell, like artwork, right? Like some pieces of art, after they're tokenized, might trade for higher valuations than it would if it sold at an auction. And with that said, though, I don't think that security tokens are going to be some get-rich-quick boom for everybody all the time, right? Like we saw a lot of craziness in the ICO space over the past several years. I think the security token market is going to move slower. I think it is going to be obviously more regulated, which I believe is a good thing in certain cases because it's going to eliminate a lot of these scams. But it's not going to be some boom where you need to rush into this and just throw all your money into it overnight. And as things are today, accredited investors are going to have access to more and potentially better deal flow. Now, with that said, non-accredited investors are also going to have access to Reg CF and Reg A rounds. But this is kind of my beef with the accredited investor rule is a lot of times the best rounds are limited to accredited investors. Now, talking about the accredited investor rule, it's my personal opinion that there has got to be a better way, right? Just the one criteria that if you have $1 million in the bank, you are somehow a wise investor is a ridiculous concept to me. I know people that are in the crypto space, either high-skilled developers or, something that they understand the space really well, but they don't have $1 million and therefore they're not qualified to invest in some of that stuff. I think just like anything else, if you think about the word accredited, there should be some kind of, again, this is just my personal opinion, but there should be some kind of accreditation, a test or some kind of, other option other than the net worth or income category. And I get why that rule's in place to try to protect investors. I just think it's lazy regulation and there's got to be a better way. And that's why I try to educate. That's why I do these videos, is to help people learn the wise and responsible way to invest in the markets. Now, another prediction I have about security tokens is I believe they're going to take massive market share from penny stocks, especially, right? Companies that were planning on IPOing on the OTC markets, right? Basically just penny stocks. I think a lot of those are going to really gravitate towards the security token model. And I think that companies are going to prefer STOs over the traditional IPO because it's going to be faster, cheaper, and easier to raise capital. And eventually all securities will be tokenized. Now, this isn't going to happen overnight, but I do believe that within the next decade, most securities, if not all, are going to be tokenized. They're going to be on the blockchain. It's just better technology, right? And again, it's kind of like the next evolution in the financial markets. Just like, 50 or 100 years ago, we used to trade stock with actual paper, and now it's all done electronically. This is just the next evolution in electronic trading. And the early stage investments, I believe over the next decade, are going to outperform blue chip stocks. Meaning, like, I think, and again, not all startups are going to outperform, but I think as a whole, if you can get access to really high quality early stage investments, I think the growth there is going to way outperform the public stock market over the next 10 years. We'll see, and I'll hopefully do a video 10 years from now and have some kind of stuff to demonstrate with my own investments. But I'll tell you, I do own a percentage of my net worth is in public stocks, but I'm much more excited about and put a lot more effort in finding early stage investments that are high quality that I think have massive growth potential over the next several years. I also believe that startups are going to register their companies in countries that are friendly to business and raising capital. And kind of the flip side of that is countries that put in bad regulation are going to drive those companies out and are going to basically steal prosperity from their citizens, right? Governments that overregulate and put just, quite frankly, bad regulation in place drive innovation out and stifle innovation locally. So just some final opinions. And again, this isn't financial advice, but I don't think there's really any rush to just throw your money randomly at security tokens, right? I think the better play is to take your time and learn, study, invest in yourself, develop your skills, learn wise investing, right? Try to hustle and create income and build wealth so you have that risk capital to put into these markets. Because again, that's why we say don't invest with money you can't afford to lose, because if you do that, you're going to put yourself in a really bad financial spot when some of these projects fail. And like I've always said, like over 90% of startups fail. I don't care if it's traditional businesses, if it's a blockchain company, if it's a new protocol company, if, 90% of startups fail, guys. So think about that when you're investing and just make wise financial decisions. So I hope this video is helpful. And just a quick question of the day. Are you excited about security tokens? And if so, what are you looking forward to the most? What are you most excited about? And I hope you got a lot of value out of this episode. If you haven't subscribed, go ahead and do that now. Leave me a comment or a question below, and I will see you in the next episode. Take care, guys.